Hey everyone, welcome back. This isn't just a book you read, it's a book that rewires the way you think. It's called Trading in the Zone by Mark Douglas. And if you're serious about becoming a consistent trader, not just lucky, not just emotional, but truly professional, this book is non negotiable. Because here's the truth: most traders lose money not because of the market, but because they can't control their own mind. So, in the next few minutes, we're going to break down the core principles that separate amateurs from pros, straight from the pages of Trading in the Zone. Get ready, because this isn't motivation. This is transformation. Part 1: Mastering the Mindset: From Random Results to Consistent Profits. A professional's interpretation of Mark Douglas' core philosophy. Introduction: The hidden enemy in trading. In the world of finance, traders obsess over systems. They fine-tune technical indicators, track moving averages, analyze chart patterns down to the pixel. They build algorithms, backtest for months, subscribe to signal services, all in pursuit of one thing: certainty. But here's the hard truth: markets don't offer certainty. And most traders aren't losing because of a bad system. They're losing because they never learned how to think like a professional risk taker. That's the central thesis of Trading in the Zone, a modern classic in trading psychology authored by Mark Douglas. This isn't a self-help book for traders. It's not motivational fluff. It's a mental blueprint for consistency. And it starts with one of the most radical ideas in modern trading psychology. You don't trade the market. You trade your beliefs about the market. 1. The illusion of control: why intelligence isn't enough. Wall Street is full of brilliant minds: MBAs, PhDs, former engineers, analysts with IQs that break the charts. And yet, most traders fail. Douglas cuts straight to the reason. Markets don't reward intelligence. They reward emotional discipline. Let that sink in. You could have a flawless model, but if you hesitate at the moment of execution, if you let fear, greed, or doubt creep in, you'll sabotage your own edge. Most traders enter the market with a deeply flawed assumption: if I study hard enough, I'll be able to predict what comes next. Douglas dismantles that belief immediately. The market doesn't care how well you've prepared. It doesn't care about your background, your intuition, or your last winning trade. The market is a dynamic, ever-changing environment of probabilities, not certainties. 2. The real battle: certainty versus probability. Here's what separates professionals from amateurs. Amateurs look for certainty in every trade. Professionals embrace uncertainty and work within it. Douglas introduces the idea of thinking in probabilities. This is the most critical mental shift a trader can make. Think about how a casino operates. They don't know which player will win the next hand of blackjack. But over thousands of hands, the odds are in their favor. And because they control their risk and enforce their rules, they win consistently. This is exactly how professional traders operate. You don't need to know what's going to happen next to make money. Mark Douglas. 3. The mindset of a consistent trader. What does consistency look like in trading? It's not about being right 90% of the time. It's not about doubling your account in a month. It's about executing your edge flawlessly, regardless of how you feel. Douglas outlines the core beliefs of a consistently successful trader. Anything can happen. You don't need to know what will happen next to make money. There is a random distribution between wins and losses. An edge is nothing more than a higher probability of one outcome over another. Every trade is unique. These beliefs are not just intellectually understood, they must be deeply internalized. Because the moment you forget them, you revert to emotional trading, over-leveraging, revenge trading, fear-based hesitation, euphoria after wins, panic after losses. Professionals eliminate this by training their mental environment to be detached, grounded, and process-focused. 4. The mental conditioning of retail traders. Let's get brutally honest. Most retail traders come into the markets with baggage, psychological patterns developed from life outside trading. In school, we're taught to avoid mistakes. In careers, we're rewarded for being right. In society, we're praised for certainty and punished for doubt. But in trading, those same behaviors will destroy you. The need to be right, the fear of being wrong, the instinct to avoid loss at all costs. These mindsets are deeply ingrained, but utterly toxic in the market environment. Douglas argues that success in trading is less about learning and more about unlearning. You must strip away the psychological habits that don't serve you and replace them with new mental models, ones that align with how markets actually work. 5. The professional framework. Detach, observe, execute. Professional traders operate like snipers. They observe the market without judgment. They execute based on probability, not emotion. They accept losses as part of the business. No drama, no stories, no ego. This is the state Douglas calls the zone, a mental space of complete presence, trust, and flow. Not because you know what will happen next, but because you've accepted that you don't and you're okay with that. That's where true freedom in trading begins. 6. The emotional cost of wanting to be right. Here's a deadly trap: attaching your self-worth to trade outcomes. Every time you equate being right with being good and being wrong with failure, you create a psychological war inside your head. One loss turns into frustration. One missed move becomes self-doubt. One wrong entry morphs into a downward spiral. Douglas reminds us, being wrong is not failure. It's statistical noise. Your job is not to avoid losses. Your job is to make peace with them and still pull the trigger when your edge presents itself. That's how pros keep showing up day after day with unwavering confidence. 7. Building the psychological infrastructure for success. So how do you rewire your brain for trading consistency? Douglas outlines a set of internal commitments that form the bedrock of a trader's psychology. Risk acceptance. Before you enter, you've emotionally accepted the worst-case scenario. Process discipline. You follow your plan, no matter how you feel. Detached confidence. You trust your edge without needing every trade to work. Mental rehearsal. You visualize staying calm, centered, and objective, even during chaos. These are not tactics, they're habits of thought. And just like any skill, discipline, neutrality, emotional control, they're trainable, but only if you're willing to make the inner game as much of a priority as your strategy. Conclusion of Part 1. Consistency begins in the mind. Let's summarize the essence of this first part. Markets are uncertain. Losses are part of the game. You don't need to be right. You need to think probabilistically, execute consistently, and manage your mind ruthlessly. This isn't easy. It takes work, but it's the only sustainable path to long-term profitability. Trading in the zone doesn't teach you how to read charts. It teaches you how to read yourself. And once you master that skill, the market becomes a place of possibility, not pain. Part 2, Reprogramming Your Beliefs, the Invisible Architect of Trading Behavior. A Wall Street-level breakdown of the mental game, inspired by Mark Douglas. Introduction. Your beliefs are your strategy. Let's state a brutal fact. You don't trade your system. You trade your beliefs about the system. This single insight, drawn from Mark Douglas's core philosophy, flips the entire trading world on its head. Because what if I told you that every hesitation, every fear, every act of self-sabotage wasn't caused by the market? It was caused by you. More specifically, by your internal belief architecture. A set of unconscious ideas, assumptions, and emotional patterns that were wired into your mind long before you ever opened a trading account. This is what Douglas tackles in Part 2 of his mental blueprint for elite trading. You must reprogram your beliefs if you ever hope to achieve consistency. Let's unpack what that truly means. 1. Beliefs, the silent algorithm running your trading. Beliefs are not just thoughts. They are filters, mental algorithms that shape how you perceive the market in real time. Two traders can look at the same chart and see two different realities. One sees opportunity, the other sees danger. One pulls the trigger, the other freezes. One accepts the loss, the other goes into revenge mode. Why? Because their belief structures are different. Douglas teaches that every decision you make in the market is filtered through your subconscious model of reality, built over years of life experience, trauma, wins, losses, childhood conditioning, and emotional imprints. Until you expose and rewire that model, your results will remain random, regardless of how good your system is. 2. Trading is not about knowledge. It's about belief integration. Here's a dangerous trap most traders fall into. Thinking that reading more books, watching more videos, or backtesting more charts will automatically lead to better results. Douglas calls this intellectual knowledge, and he warns that it's not enough. What matters is emotional integration, transforming beliefs at the subconscious level so that your actions align with your strategy without resistance. Think of it like this. You may know you should cut losses quickly, but if you believe that taking a loss means you failed, you'll hesitate and violate your rule. You may know you should let profits run, but if you believe deep down that you always lose money in the end, you'll exit early. This internal conflict is what destroys traders, not lack of knowledge, but unresolved belief tension. 3. The origin of limiting beliefs in trading. Where do these beliefs come from? Douglas explains that many traders bring psychological habits into the market that were formed in entirely different environments. School taught us to avoid being wrong. Society taught us to seek approval. Family may have taught us that money is scarce, or dangerous, or evil. Careers trained us to expect consistent rewards for effort. The market doesn't care about any of that. It doesn't reward effort. It doesn't care if you deserve a win. It doesn't punish you for making the right decision that happens to lose. The market is impersonal, but we, as humans, are deeply personal. So we project all our emotional baggage onto the price screen and then wonder why we self-destruct. 4. Belief clusters. Why you keep making the same mistakes. Douglas introduces the idea of belief clusters, interconnected webs of thoughts and emotions that shape your trading identity. For example, if you believe, I must avoid being wrong at all costs. Losing trades mean I'm a failure. If I'm smart enough, I can predict the market. Then you'll unconsciously avoid placing trades, hesitate to cut losses, overanalyze until you miss the move, or hold on to bad trades just to prove yourself right. These behaviors aren't random. They're reflections of belief structures. Until you dissolve the cluster, you will repeat the pattern again and again. That's why changing your strategy without changing your beliefs is like repainting a sinking ship. 5. The trader's identity. Who you believe you are determines what you'll allow yourself to earn. Let's go deeper. Every trader operates from an identity, a set of beliefs about who they are, what they deserve, and how they relate to risk, success, and money. Douglas points out that if your internal self-image doesn't match the outcomes you want, you will unconsciously sabotage yourself to stay safe. For example, if you see yourself as just a small trader, you'll shrink from big opportunities. If you carry guilt around making money easily, you'll unconsciously create drama to deserve it. If you believe that trading is risky and dangerous, you'll constantly find ways to lose. This is why psychology trumps technique. Your internal permission system determines how much success you'll allow yourself to experience. 6. Reprogramming. How to rewire beliefs without willpower. So how do you change your beliefs? Not by brute force, not by affirmations alone. Douglas offers a subtle but powerful process for mental reprogramming. 1. Awareness. You must first become aware of your limiting beliefs. Track your emotional responses to trades. Write down recurring thoughts after losses or wins. Expose the unconscious stories that drive your reactions. 2. Detachment. Don't judge your beliefs. They're not bad or wrong. They're just outdated software that no longer serves your purpose. Detach and observe like a scientist, not a critic. Replacement. Consciously install new beliefs that support consistent behavior. For example, a loss is just the cost of doing business. I don't need to know what will happen next to act on my edge. My value as a person has nothing to do with the outcome of this trade. Repeat them, visualize them, and reinforce them through action, especially in moments of pressure. Because beliefs don't change through thought. They change through experience. 7. Building mental confidence through no-friction execution. Douglas introduces a concept few trading books ever mention: no-friction execution. This is when your actions flow effortlessly from your rules without emotional resistance. It's the ultimate sign that your beliefs have been integrated. You see the setup, you act, you accept the outcome, and you move on. No hesitation, no second guessing, no drama. This isn't cold. It's professional. It's how elite traders operate. because they've trained their beliefs to align perfectly with the truths of the market. That's the real secret. 8. Freedom through belief alignment. Let's end with the ultimate promise of this chapter. When your beliefs match the nature of the market, you experience freedom. Freedom from fear, freedom from revenge, freedom from overthinking, freedom from needing to be right. You begin to flow with the market, not fight it. You respond, not react. You focus on execution, not outcome. You finally step into the zone, where consistency is no longer a struggle, but a side effect of alignment. That's not hype. That's high-performance trading psychology. And it all begins not with your broker, your indicator, or your strategy, but with your beliefs. Thinking in probabilities, the mindset of consistent winners. The final transformation from emotional trader to strategic operator. Introduction. You're not in the prediction business. You're in the probability business. Here's the final turning point. The transformation from a struggling trader to a consistent one doesn't lie in mastering indicators, timing tops, or reading the news faster than others. It lies in one shift, from thinking in outcomes to thinking in probabilities. This is the great filter, the mental firewall that separates the amateurs from the elite. Mark Douglas made this principle the cornerstone of consistent trading. And if you absorb it fully, it won't just change how you trade, it will change how you think. Let's dive deep into what it truly means to think like a probability-based professional and how doing so frees you from fear, ego, and inconsistency forever. 1. The market is a random outcome generator, and that's a good thing. Let's confront the myth. Most traders believe that if they're good enough, they'll know what the market will do next. Wrong. The truth? Every individual trade outcome is random. Even if your edge has a 70% win rate, you have zero control over whether the next trade will be a winner or a loser. Just like flipping a loaded coin that comes up heads 70% of the time, any single flip is still uncertain. The key is this: your edge plays out over a large sample size, not in one trade. You don't need to know what will happen next to make money. You just need to act consistently on your edge. This probabilistic thinking is what allows top traders to operate with cold precision, because they're not trading to be right, they're trading to let the odds work over time. 2. The casino model, your blueprint for thinking like a winner. Mark Douglas famously compared successful traders to casinos. And it's not just a metaphor, it's a mental model. Think about it. A casino knows the odds of each game. It doesn't care about any individual hand, spin, or roll. It makes sure to execute its edge millions of times, and over time, it always wins. Now apply that to trading. Your strategy is your edge. Your job is to execute that edge flawlessly. You must not let any single trade affect your mindset. In other words, think like the house, not the gambler. And when you do, something magical happens. You stop fearing losses. You stop over-celebrating wins. You start operating from clarity, detachment, and confidence. You're no longer chasing the market. You're running your business. 3. Why most traders fail to think in probabilities. Despite this logic, most traders don't adopt probabilistic thinking. Why? Because we're not wired for it. The human brain evolved to seek patterns, control, and certainty. We crave meaning. We hate randomness. We want cause and effect, not statistical variation. So when traders encounter a losing trade, they take it personally. What did I do wrong? The market tricked me. I knew I shouldn't have taken that trade. This emotional reaction destroys their ability to execute objectively. Douglas warns, until you fully accept that losses are inevitable, random, and part of the game, you'll always trade from fear or hope. And that, ironically, guarantees failure, even with a great strategy. 4. The 5 fundamental truths of trading. To rewire your mindset, Douglas teaches 5 core principles that must be internalized at a belief level. 1. Anything can happen. Yes, anything. At any time, on any chart, for any reason. If you're not at peace with this truth, you'll be blindsided when the market does something unexpected. 2. You don't need to know what's going to happen next to make money. This is where freedom begins. You stop trying to predict and start managing probability. 3. There is a random distribution between wins and loss for any given set of variables that define an edge. Even if your system has a 70% win rate, those wins may come in unpredictable clusters. 3 wins, 2 losses, 5 wins, 4 losses. Don't expect perfection, expect probability. 4. An edge is nothing more than an indication of a higher probability of one thing happening over another. It's not a guarantee. It's not a prophecy. It's a tilt in the odds, and your job is to exploit it systematically. 5. Every moment in the market is unique. No two candles, patterns, or conditions are ever identical. Stop expecting repeatable outcomes. Start seeing each trade as a fresh event. These 5 truths form the mental armor of the consistent trader. 5. Letting go of the need to be right. This is the hardest part. To trade in probabilities, you must kill your ego. Because the ego wants to be right. It wants to feel smart. It wants to win every time and prove its worth. But trading is not a place for ego. It's a place for discipline, process, and statistical execution. Douglas explains that the moment you need to be right, you'll resist taking valid losses. You'll break rules. You'll exit too early or too late. You'll start trading emotionally, and the spiral begins. The consistent trader sees being wrong as neutral because it's not personal. It's just part of the edge. Think like this. If the trade fits your rules, take it. If it hits your stop, move on. If it runs in your favor, manage it by plan. Repeat. No drama, just business. 6. Building confidence through sample size, not single trades. Here's a powerful shift. Confidence in trading doesn't come from being right. It comes from executing your edge consistently over time. Douglas emphasizes that the only way to develop bulletproof confidence is to define your edge clearly, execute it without deviation, track your results over at least 20 to 30 trades, detach from individual outcomes. The larger your sample size, the more statistical truth will emerge. Your system will speak for itself. But most traders sabotage this by changing systems after a few losses, adding indicators mid-trade, doubting themselves after each stop out. Don't do that. Stay the course, collect the data, build the conviction, because the market rewards consistency, not brilliance. The psychological power of predefined risk. Mark Douglas hammers this concept repeatedly. You must predefine your risk on every single trade. Why? Because when you know exactly how much you're willing to lose, your emotions have no power, no fear, no panic, no revenge. Predefined risk transforms you from a reactive trader into a strategic operator. Ask yourself, what is the exact dollar amount I am risking on this trade? Am I emotionally prepared to lose that without flinching? Does that risk allow me to trade again tomorrow with full confidence? If the answer is no, don't take the trade. Because if you're not at peace with the risk, you'll violate your plan the moment the market moves against you. Discipline begins with clarity, and clarity begins with risk control. 8. Trading in the zone, the state of flow for the professional mind. Douglas defines the zone as a mental state where you execute with calm confidence, free from internal resistance. You enter the trade without hesitation. Let the market play out. Accept the result, win or lose. Move to the next trade without emotional residue. In the zone, you're focused, not frantic. You're relaxed, not rigid. You trust your process, not your predictions. This is where true consistency lives, and it's only possible when your beliefs align with market reality. Your mind accepts randomness. Your execution becomes automatic. You're no longer a trader with emotions. You're a professional with a system. Conclusion: from trader to strategist, the final identity shift. Mark Douglas doesn't teach you how to read charts. He teaches you how to read yourself. Because in the end, the market doesn't beat you. The chart doesn't deceive you. The news doesn't trap you. You do. And once you accept that full responsibility and embrace the probabilistic nature of trading, you transform from reactive to proactive, from emotional to strategic, from uncertain to unshakable. That is the real prize, not just profit, but personal power. And that's what trading in the zone delivers. If this breakdown of trading in the zone opened your mind, then understand this. It's not just one book. It's an entire world of financial wisdom that most never access. We're building a vault of the greatest books in trading, investing, psychology, and financial mastery, decoded and delivered with precision. So if you want to think like a top 1% investor, If you want to train your mindset like a world-class trader, if you want to rise above the noise and build real wealth from the inside out, hit subscribe, turn on notifications, and join us for the next powerful book that could change the way you think forever. This is more than a channel. This is your financial edge, delivered, decoded, distilled. Subscribe now. Your transformation has already begun.